You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody, that music means we are back. It is Wednesday, time to roll out the old OBC program once again. Talk a little bit of the old options education. My name, of course, Mark Longo from theoptionsinsider.com. Remind you at the top of the show, make sure you subscribe to the full network wherever you get your favorite podcasts. A lot of great stuff coming at you. If you like crypto, it's there. If you like vol, it's there. If you like unusual activity, it's there. If you like a lot of flow analysis and all sorts of fun, you like futures, options, man, it's all there for you. Make sure you subscribe to the full network. And of course, if you want to go above and beyond, awesome pro Q&A this week for our pro members with the one, the only Mr. Tony Saliba, the original market wizard from that book. Just a great guy. I haven't talked with him in a while. Great to have him come back. He loves talking to our pro members. He has a ball with it. So that was certainly a rare opportunity for our pro members to pick his brain. If you want to get it, the guy loves flies. I've never seen anyone who loves butterflies more than him. He will talk flies for hours, also crypto, a bunch of fun stuff going on. If you want to get access to that, you want to get, of course, Options Oddities each week, which is the semi-official after party of Volatility Views. You want to get giveaways, live streams, real true exclusives that only you folks get. TheOptionsInsider.com/pro is the place to go. You missed the Tony episode, but of course you can go listen to it on the Pro podcast feed whenever you want, and you'll get your name in the hat for the next Pro Q&A, which should be an awesome one. As we turn our attention now to the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, or as we call him around these parts, Dan Giuseppe Passarelli. Are we getting anywhere closer?
It doesn't start with a G, but other than that, you're in a similar vein here.
No G. So I was wrong on my Geronimo from previous weeks then as well, apparently.
Yes.
How are things in MTM land, sir?
Things are freaking great, Mark. I can't tell you. Just can't tell you how great.
Awesome.
Yeah.
Glad to hear it. Are you psyched for a doubleheader extravaganza, sir?
I am very psyched, as a matter of fact. We've got a cool episode here. We've got a couple of cool episodes.
Two
I like
cool
the Q&A
episodes.
ones.
Yeah. I neglected to mention at the top of the show, another benefit of being in the pro. You don't have to wait till next week to get episode 2. You get it right now as we keep on rolling right on into a little bit of the old, I guess we're calling this Let's Get Exotic.
Let's get exotic.
And of course, I don't have that drop on this machine, so we'll cut it in later. But we'll pretend we said it. Dan said, "Let's get exotic." There we go. It sounded good. It was very sultry. Kind of a little bit disturbing coming from him. All right, let's get down to business, listeners. It is time to get exotic. We are building upon the foundation that we laid last episode when we talked binaries. Dan Have you recovered from our binary extravaganza from last week? And anything you want to add before we dive deep into yet another week exploring the various platforms and ways you can trade these things?
Yeah, I'm glad we laid some groundwork last week on this, and I look forward to taking it further. It's going to be great.
Going to be great indeed, listeners. As we get into the business of, let's talk about what is actually going on out here in this market. What is trading? Where can you trade these things? Let's get down to brass tacks with binaries. And Dan, let's play a little word association with you again. If I ask you right now, binaries, what is the name, brand, or the venue that leaps to mind first for you?
You mean besides Hedge Street?
Yes, besides the legendary Hedge Street, which we established last show. You have a sweet tchotchke. I bet you if you went price it up on eBay, probably be going for some money, sir. Or people will be like, what the hell is Hedge Street? And you make the market. There you go.
That's right. I just think about the big ones, Kalshi and Polymarkets. That's about it.
Yeah, Kalshi is probably the starting point for a lot of people, which is wild because I think most people had never even heard of them until right around the election last year. I had heard about them earlier. People had mentioned them to me, and I remember saying, none of that stuff is that legal to trade here in the U.S. We didn't really pay much attention to them. Of course, that changed last year, listeners. In one of the more serendipitous bits of timing, Dan, we've seen in the options market, or just in the world of derivatives as a whole. Sometimes they say it is better to be lucky than good or smart, or have good timing. And in this case, they certainly did. They had been tied up in litigation forever with the CFTC about whether they were actually approved as a, derivatives trading venue here in the US. Well, back in October, early October of last year, they got a ruling from the US District Court of Columbia against the CFTC for Kalshi. That pretty much paved the way, Dan, for Kalshi to start slinging contracts here in the U.S. They had been approved, I think, back in somewhere in late 2020, somewhere on that range, but it had all been tied up in litigation for years. But of course, last October, Dan, there was one big event on the horizon about a month later. Can you possibly think of what that event was, sir?
Could it have been the election?
Yeah, it's wild how that worked out, right? And all of a sudden, these prediction markets, as they were being called, were being touted everywhere. You saw CNN running, their usual Gallup and all the other polls. And then, the Kalshi prediction markets and everything else. And they got a huge boost, huge just increase in awareness just from that alone, listeners out there. So kind of interesting. I took some umbrage with them being called prediction markets. I mean, that is what they are at the end of the day. But there's also a notion that if it's being used as a poll, people should remember this is a poll you can buy the results of, right? So it made sense to me. If you're a campaign and they're spending hundreds of millions of dollars, if not billions of dollars to win the presidency, why wouldn't you allocate 10, 20, 50 million to bid up a binary market somewhere, right? Because then you could tout that everywhere, say, look, the smart money has me winning. So I was always kind of dubious, especially around events like elections, the predictive nature of these things, because they could be manipulated. But we'll get to all that fun, maybe some potential manipulation going on in these markets, Dan, in a little bit of a tease. Let's kick things off with the one maybe you folks are most familiar with. This is Kalshi. They are, as of last October, approved here in the U.S. And so what are we trading on Kalshi? We talked about contracts. Binaries used to default to 0 to 100. It seems like the new norm in the binary world, Dan, is taking that same methodology we talked about last week, which is pricing your contract around the probability. So if you think your event is a virtual coin flip, then your event is going to be trading around a 50 probability. In the 0 to 100, it'll be trading $50. In a lot of these platforms, including Kalshi, they dial that back, make them smaller, more bite-sized for people. So they trade in $1 terms, Dan. So if it's a 50 probability, it's going to be trading 50 cents. So obviously a binary, if it pays out, going to pay you a full dollar. If it's not going to pay out, doesn't happen, you get nothing. So a $1 contract. Dan, what are your thoughts on the $1 versus 100 binary sizing? Do you prefer one or the other?
It's hard to say. I mean, I guess you get a bigger sample size by making it more accessible to a greater number of people. And I mean, when it's $1, geez, like everybody can vote in this poll, if you will. So yeah, I mean, $100 too. I mean, that's still, maybe you're getting people a little bit more serious then, but I mean, there's always noise in markets. I don't know. Yeah, it's probably better at $1. Yeah, it's probably better at $1.
Yeah, it does open the door to more people, and that has kind of been the mantra for a lot of platforms we're seeing out there these days, is trying to democratize these contracts. And we've seen, of course, the trend towards smaller, more bite-sized contracts out here for a while. So Kalshi, that's what you're getting. You're getting, these $0 to $1 contracts. They offer markets on just about everything these days, Dan. They were offering, the Oscars last year, way before anybody was even thinking about that. They have sports. They, of course, had the election, which kind of put them on the map for a lot of people. They have the traditional macro stuff as well, where the S&P, will the S&P be above a certain level? Where will the Fed funds rate go? Where will rates go? That kind of thing. The depth and liquidity of what you're getting there is going to obviously vary depending on how popular some of the underlyings you're looking at are. Obviously, some of the big macro stuff, the big indexes, the big rates, and some of the sports stuff resonates pretty well as well, which also gets into that kind of overlap, the Venn diagram between this and gambling, Dan, which I know a lot of people have, especially who have been in the space for a long time. Talked about this with Tony on the Pro Q&A on Tuesday. He's obviously been in the options game pretty much since the beginning. And there are a lot of people out there who kind of remember the early days of options and when the SIBO wouldn't even have the options industry conference in Las Vegas because they were that scared of the connotation of gambling. And now we have, these platforms that allow sports wagering along with your macro and everything else you have going on out there. Certainly not the best thing for the DraftKings and the FanDuels of the world, which is probably why their stocks have taken a hit. But Dan, do you take any umbrage on that? Do you have any concerns about crossing those streams of bringing, let's say, Chiefs, Eagles onto the same platform where you're trading S&P or crude oil, all that kind of stuff?
I don't know. I mean, this goes against my pro-liberty sensibilities here, but it also is congruent with my marketing sensibilities. I mean, it is a little off-brand. If you want to have an organization that instills trust and stewardship and integrity, and you basically just turn it into a gambling venue. I mean, it's not a good message, and it's kind of, it's bad for credibility.
It is kind of interesting. Might be a fun poll question of the week to ask our audience. Do they like that line of demarcation between the two? I will say I like the line of demarcation, but I also would like, let's say, some more liquidity and improvement on the wagering side of the space to get better products. Why should you be dependent on a broker to allow you to cash out when you could have an actual listed spread on your trade, quote unquote, and be able to hit the bid whenever you want to exit? There are benefits to that. So I think there's a reason why FanDuel is getting in bed with the CME right now, right? They see the writing on the wall, and CME vice versa as well. So it is kind of interesting. Kalshi, again, kind of kicking off this latest wave of binaries here in the U.S. Their commissions are pretty nominal out there. They have maker-taker and taker-maker fees, all stuff we are familiar with here in the U.S., listeners. So the Pro, of course, you're getting now a CFTC-regulated exchange. Fees do kind of vary a little bit. Some platforms are $1 a contract kind of thing, not quite as linear on the Kalshi platform. And again, once you get outside of some of the more popular sports and macro markets, things can be a little bit thin, but that still is kind of the name of the game for a lot of people out there when they're looking at these binaries out here. Now let's go to another one that some of you may be less familiar with, but also kind of kicked off. I will say this for our buddy, Mr. Petterfee, who runs IB, Dan. He never saw an opportunity he didn't take advantage of, and he saw this opportunity here before a lot of others did. Everyone seems to be waking up to the opportunities in the event space now, but he saw this, and he jumped on it right around the time that lawsuit went through, and he spun up ForecastEX, which is a separate entity, but owned by the same person who owns Interactive Brokers there. And they are doing the same thing. They're CFTC approved. They provide the $0 to $1 binaries on a lot of the same products. All right, I know some people have expressed a little bit of concern about how to exit a contract on ForecastEX, including our good buddy, the Flowmaster. So let's walk you through an example because it is a little bit obtuse. You can't just come in, buy your binary, and then sell it out whenever you want to close it. Instead, you have to take the other side to close it out. So let's walk you through an example. This is the official example from the ForecastEX site, if you're wondering where we got this from. So in their example, they say your binary is on will the U.S. unemployment rate exceed 4%? When you first come in to buy the contract, the yes price is 43 cents. So you pay 43 cents for yes, the unemployment rate will exceed 4%. As the contract progresses, things change a little bit on the unemployment scene. Your wager not looking as good now, so the yes value drops to 21 cents or a 21% probability. Now, you can't just turn around and hit that bid to exit. Instead, if you want to close out your position, you have to effectively offset it by buying the opposing position. In this case, the no contract. So in their example here, the value of your yes has dropped from 43 cents when you bought it to 21 cents. The no contract is trading for 80 cents. So you paid 43 cents to buy the yes. Now you have to pay 80 cents to get out of it to buy the no side. So effectively, what have you done? You've paid $1.23 for a binary contract that has a max value of $1. I know it's a little bit obtuse, but therefore your loss is 23 cents. So you backed into the same thing at the end of the day, but it's a little bit more roundabout, a little bit obtuse. I know for a lot of people who are first coming to grips with binaries, this is a little confusing. This is not how they thought they would be able to exit a position. So just something to bear in mind if you are coming to play on ForecastEX. They have a more straightforward commission schedule, just a penny per contract. It's 0, or I should say 1 cent to $1 for your payouts. And it's very similar in that sense to what we're seeing in Kalshi. And you can get them through a lot of different venues, which we'll get to in a second. Dan, have you played around much with either Kalshi or ForecastEX?
I've looked, so actually not ForecastEX. I haven't actually, but I mean, Kalshi, yeah, I mean, I've looked at, I have not actually placed a trade or bet or however you want to phrase it on there at this point, but I wouldn't be surprised if I do at some point in the near future.
Yeah, it is kind of inescapable out there these days, these platforms. And certainly for our programming, I'd like to think we were ahead of the game on the binary front. We were talking binaries with Nadex, well over a decade ago, when they were the only legalized game in town. And the name and the term binary was very much a curse word. You said binary option. It was pretty much associated with scamming, as we established in our last show, listeners. So those are kind of two of the main venues. I put them first for a reason, listeners. A lot of you might think of binaries and event contracts through Robinhood. They made headlines, I think it was earlier this year, back in March, when they announced they were going to spin up their own event portal. And for a lot of people, that was really what ushered them into the event game. They already had a Robinhood account. They were trading fractional equities. They were doing some small options trades. And now one tab away was this, what they termed their predictions hub over there in Robinhood. I put this after Kalshi and ForecastEX because that's effectively what they're offering, Dan. They don't really have a Robinhood event contract that they're offering. They're just effectively the affiliate marketplace to connect you to Kalshi and to ForecastEX. So if you're trading an event contract at Robinhood, that's pretty much what you're trading. They started with Kalshi. They since have added ForecastEX. So if you're trading an event contract at Robinhood, you're going to notice a lot of similarities to what we just talking about, penny to $1 and all the same fees. They're going to tack on their own fee on top of that $1 from ForecastEX or other places. So you're probably going to pay $2 versus $1, a dollar to each. But that said, everything else is pretty much the same. So even if you didn't know it, if you've been trading any event contracts through the Robinhood quote unquote prediction hub, then that's what you've been trading. You know, the pro of that, obviously, it's very easy to find. A lot of you already have a Robinhood app. The cons of that, of course, is that there's going to be more fees on this now. ForecastEX is still charging their fee, and Kalshi is still charging their fee, and then Robinhood has to get their piece as well. So you're going to pay a little more to do it for the convenience. It's like the convenience store, Dan, of Binaries. You're going to go in, you're going to buy your microwave burrito at 3 a.m., and then you're going to pay double commissions to get a Chiefs Chargers. Why not?
Yes, I like it.
You think Robinhood will appreciate that analogy? The late night microwave burrito of the predictions game.
Maybe if you change it to Taco Bell, maybe that's
Taco
more.
Bell. Okay, make a run for the border and also the predictions hub. I could see that. Taco Bell might get a little litigious on that. And then the one a lot of you may have heard of, but maybe know less about. Dan, you mentioned this in the opening when I asked you to name the kind of quote unquote brand names that we associate with binaries here in the US. This is Polymarket. It's weird because Polymarket not really available here in the US, which is why I say a lot of you may have heard of them but don't really know much about them or have much access to them. They do the same $0 to $1 structure, so that is kind of the norm for all the newer ones, the newer entrants to the event space. The legacy players still hold to the older model. I'll get to that in a second. So you're talking $0 to $1 priced around a probability, all the same as everything else we've seen before. These are on the Polygon blockchain, I believe, and that's what is kind of some of the nuance here. There's a lot of overlap, obviously, between the crypto world and Polymarket. In fact, you need a crypto wallet if you are going to trade that here in the US. They say no fees, Dan, but there are going to be gas fees. And if you know anything about crypto, you know what those are. And so you are going to pay gas fees. So if you're going to access this, it's still not really regulated or approved here in the US. So if you're going to trade it here in the US, you're going to have to go through some external means, which may or may not be the most ideal situation. You have to be pretty crypto savvy. You're going to have a wallet set up to be able to facilitate this type of trading. But if you can handle that, then you will have access to a lot of markets. I mean, Polymarket, they might hold the title for the most varied offerings on their platform because they also include crypto and other things that a lot of the other ones don't. Now, again, some issues, liquidity, again, like a lot of the other platforms, it's going to vary like any market. You know, your front month at the money Apple option is going to be far more liquid than 6 month out, 30% out of the money. Same thing with these platforms. You know, the popular products are going to have much larger depth of liquidity than some of the more nuanced stuff. They have a history on crypto and DeFi, so those products actually have pretty strong history of liquidity on that platform out there. So there's something to bear in mind. Something to bear in mind with all these products too, or these platforms. I'm talking about fees, but remember, fees are also in the slippage. And some of these platforms will obviously try to charge you that spread to get in and get out. Obviously, it's going to be wider on less liquid contracts, but bear that in mind. Fees can materialize in multiple ways, not just the $1 per contract, but they may widen out a spread a little bit or something along those lines to try to extract a little extra value from you, the consumer out there. So if you can get access to Polymarket, it does have a very large product pool for you to sort through out there, listeners, which is a good thing. But on the flip side, the liquidity is going to vary, obviously. And also, interestingly enough, Dan, this just broke this week. A study out of Columbia University, Dan. Remember getting back to what I was saying earlier about potential manipulation on these markets. I was concerned about Kalshi as well, but also Polymarket early on, because Polymarket is one of the ones they were really hitting on as being predictive for the US election and saying, look, Trump was leading on Polymarket before he was anywhere else, and Polymarket is the vanguard of the predictive markets. And again, any poll that you can buy, I am suspicious of. But that said, there is some other manipulation going on in Polymarket right now. Again, this just broke this week. A study out of Columbia University, Dan. They went back and studied all of the recent flow on Polymarket. They did 2 years worth of data. The nice thing about Polymarket, because it is on the Polygon blockchain, it's all on-chain data. So it's all readily available to be analyzed and studied. And that's what these professors did at Columbia University. And they found, Dan, in the last 2 years, fully a quarter of all trading volume on Polymarket was noise. It was fluff. It was wash trading. That was kind of wild and a little bit alarming to some people. They say the percentage of fake trades peaked right after the election last year, which is obviously a little bit disconcerting. December of last year was the height. 60% of total weekly volume was effectively wash trading on. So we were seeing a lot of promotion around, look how deep these markets are, look how much liquidity there are. I remember hearing about this a lot during the election last year. Turns out at that time, about 60% of that was nonsense, Dan. It seems like the election was hit also. Sports markets were the number one most targeted. Over 90% in some weeks of the trades going up, they term in this study inauthentic.
What does it mean?
Well, they're just buying and selling the same contract. Now you might say, why would you do that, right? What is the economic incentive to do that? Well, that gets back to the kind of crypto underpinnings of Polymarkets. They don't charge commissions, but they do offer rewards in terms of crypto airdrops. And a lot of this is based on your activity on the platform. So the more contracts you're trading, Dan, the more chits you get in the hat to win the airdrop, right? So now you've created an incentive for people to put up artificial flow just to qualify for these future token launches and airdrops out here. So otherwise, you say, why would you're just wasting time and money? They're kind of the definition of what we call on some of our other shows, love your broker trades, where you're putting up volume just for volume's sake, just to generate commissions. You got to really love your broker. Well, these people don't love Polymarket that much. What they love are the airdrops. So again, this does not mean all the activity on Polymarket is fraudulent. It just means a large percentage of it is just wash trades, back and forth, the same contract. It doesn't really represent any real economic activity. So bear that in mind when you're seeing a marketplace that you think is liquid. That liquidity could be ephemeral, and you go in and try to hit a bid or lift an offer, and suddenly, why is this moving? Why am I not filled? Well, it's because that volume was fake. It was people trying to game airdrops. So a little bit of concerning. People have worried about these markets for a little bit now that they could be open to manipulation. I don't think anyone kind of expected this, but that's what we're getting right now, Dan. Any thoughts?
Yeah, like when I had not heard about that before you mentioned that, to tell you the truth. And when you started mentioning, I didn't get it. But I mean, now that I'm thinking about it, how could Polymarket not expect that to happen?
Exactly.
I mean, you're attracting traders and gamblers and people probably like advantaged gamblers who are good at this. Like, obviously, they're going to figure out how to game the system.
I think that speaks to people launching these venues, maybe not as well versed in the world of financial services as perhaps they should be. They got a crash course here. I mean, look at the options market. Look how many contracts people will push through in wash trades just to try to capture a dividend, right? Millions of contracts of noise on an ex-div date just to try to capture a few cents here or there if a small percentage of those contracts skate through. Same thing here on Polymarket. So yeah, they should have been aware of this. And sounds like they haven't really commented on it yet. So it sounds like maybe they were aware of it and they just didn't want anybody to know. They wanted to keep touting those numbers. Yeah, kind of dubious stuff. We're already kind of come up against it for episode 1. Let me just run through some of these other venues here really quickly. The kind of more, quote unquote, I would call them, Dan, traditional venues. If you don't want to play on the newer players, maybe you want to play on the OG binary house, then you want to go check out Nadex, aka Dan, your former Head Street, still floating around, now known as the North American Derivatives Exchange, aka Nadex. They've had it's kind of funny to see the trajectory of Nadex, Dan, because they've been kind of bounced from one owner to the next and kind of been treated as the redheaded stepchild, whereas they were the vanguard of what is the hottest part of the marketplace now. So they were ahead of the game. You think a lot of people who spun them off might be might be looking back on that wistfully saying, wait a minute, why do we saw IG had them? I think they spun them off to crypto.com. I'll have to go see who owns them now, but it's been a long and torrid affair for Nadex, whereas they were kind of the early players in this space. Now, they offer a more traditional binary, listeners. It is the old school 0 to 100 that we talked about on our episode last week. That's kind of the way these things were normally quoted until these smaller, more bite-sized venues came along. So if you're going to trade on Nadex, it's going to be a bit of a pricier in terms of notional value out there. So you have to be okay with that. And then everything else is going to be pretty much the same $1 increments priced around a probability. So if it's a 50 probability, it's going to be trading around $50 as opposed to 50 cents on a Kalshi. They have flat fees, dime per contract, 20 cents round trip kind of thing. So it's all pretty straightforward. They do offer a couple of interesting wrinkles, Dan. If you don't want to just trade a straight binary, they do offer call spreads and also knockouts on Nadex. And they started offering these a long time ago. I remember talking to them about these and saying, wow, that's kind of interesting. And so it's a call spread, but you can also sell that call spread, which is kind of fascinating. So now it's not just buying a call spread on, let's say, the equivalent of the S&P, listeners. You could sell that call spread. And they also have knockouts, getting back to some of our earlier exotic topics and issues and episodes here. We talked about knockouts and knock-ins. You can do that on Nadex as well. So they get a little bit more nuanced than some of the other platforms in terms of their actual trading products, even if they don't have a lot of the, sports and other, let's say, non-financial markets out there. Dan, have you ever traded a Nadex call spread or a knockout, sir?
I have not traded a Nadex call spread or knockout. I think I probably made a regular Nadex binary trade at some point in my past, but yeah, it is pretty crazy that so many that they got spun off so many times. That's like the record labels who didn't sign the Beatles. It's like you should look at what companies, looked at Nadex and said, this will never work. I'm going to sell this division and probably, short that company.
Just think, they had to bribe you with an iPod Shuffle to get you to trade on them not that long ago. And now it's the hottest thing in every exchange I talk to, every broker. They're all eyeing this space as a huge potential for growth. So kind of wild how sometimes first mover is not the advantage people think, Dan. Look at TiVo. Who still has a TiVo? Right? Everybody has a DVR. Nobody has a TiVo anymore, right? So, yeah, sometimes the first to make the mousetrap doesn't always win. We'll get out of here on this one, kind of the de facto traditionalist name, even if they are newer players to the binary game. We talked about them a little bit on the show last week. This is our old pals across the street, across the river here from the studio. CME, they got into the binary game a few years ago as well. I mentioned there was a bit of a kerfuffle with their pricing early on. For some reason, Dan, they went $0 to $20. And then if you wanted to back it into a probability, you had to multiply by 5. I remember saying to them, that is absurd. Why are you doing that? And then a lot of other people, I think to their credit, said that to them as well. And they realized, you know what? This is absurd. Why are we doing this? So they backed out of that. And now they have the more traditional 0 to 100. Again, that's the whole reason binaries are attractive. They're priced around a probability. Even a young kid can kind of figure out what the price should be. So it's kind of nice from that. When you start gaming with that 1 by 5, it kind of throws off the whole thing. They offer a variety of things that they trade on their platform, nat gas, the indices, all kinds of wild stuff. They haven't taken off yet, which is probably why, Dan, they just announced not that long ago their partnership with FanDuel. Like I said, that makes sense for both parties. FanDuel, DraftKings, obviously getting their clocks cleaned by these event platforms, stealing a lot of their wagering activity. And for CME, they launched their binaries, but haven't really resonated with the masses yet. So FanDuel obviously brings a built-in audience. So it's kind of a win-win there. Again, traditionalists may scoff at the crossing of the streams between gambling and traditional finance, but I think that's the wave of the future, Dan. What do you think?
Yeah, I don't know, man. That's like you putting up an ad for Options Insider on Pornhub. I mean, they get a lot of eyeballs. Is that where you want them?
Who says I don't?
Well, I haven't seen it.
Number one advertiser on. You go to Pornhub, my face is just plastered everywhere there. I won't even follow that up with further comments because that's a dark path. But yes, we're huge on Pornhub here, Mr. Dan. Any final thoughts you want to leave with the folks here before we head into episode 2 for this week?
Yeah, just, I mean, I'm all for gambling sites and everything, and I'm all for trading sites. It's just, and there is a crossover, and there's a very logical crossover, but I don't know. I think people need to. I think the people who are considering these crossovers need to think it through. I don't think it's necessarily verboten from the get-go, but I think there's some branding issues that require attention.
I think you are not wrong, sir. There's still a lot of work to be done here figuring out what the right trajectory is. You can be like a Kalshi and just say, let's do it all. Is that the right way, or is there some happy middle ground to work out there? We'll find out. We're all kind of heading into the Wild West in these markets together, listeners. But that is going to do it for episode 1 of our doubleheader. If you're hanging out in the Pro, we'll be back instantaneously in your ear holes with episode 2, all questions considered. So look forward to that in a little bit. Yet another reason why you should be hanging out in the Pro. You can get at us instantaneously. But before we go, Mr. Dan, if folks want to get at you, where should they go? What should they do?
You can make your way to markettaker.com. And, there's lots of really great free stuff there. You can apply for one-on-one coaching if you're a really serious trader. We'd love to talk to you about that. And markettaker.com. 2 T's in a row.
While you're checking things out, make sure you check out our friends over there at Tasty Trade, tastytrade.com/podcasts. They love the boot camp audience. They've been on the show many times in the past. Check out what they have for you over there, tastytrade.com/podcast. That's going to do it for us right now. Back again instantaneously for all of our Pro members. For everyone else, we'll see you next week. Another episode of Options Boot Camp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.